Hello again, I'm Victoria Hartley, Group Editor of Mortgage Solutions. I'm delighted to be with you to present the final session of our conference today. It's Niamh Downey, Business Development Manager for Bluestone Mortgages, London, is next up with a session called Packaging Right so we can give credit where credit is due. Now, specialist lenders take a far more hands-on or manual approach to underwriting cases, as you'll know. So Niamh is with us today to give you some quick wins to help you process cases more efficiently for your clients. The session will be followed by a live Q&A, so fire any questions over during the session using the chat box. Over to Niamh.
Thank you very much, Vicky. Can you hear me okay?
We can.
Perfect, lovely. Cool. So what I want to speak to you guys about today is essentially just ensuring that those trickier cases where you are having to come to subprime specialist lenders, making sure that you guys can get them through as smoothly as possible. I don't think anyone is under any illusion that it takes a little bit more legwork to get these cases through. So I'm just going to give you some tips, very general, in regards to what to look for, what potential are the most common issues that we face as a lender in regards to documents as well, and how we can kind of overcome that and get these cases through as smoothly as possible for you. So to kick off, if I start off with the bank statement side of things, so key things to kind of look out for when you're getting bank statements in from clients. First of all, I want to say as specialist lenders, we're probably very nitpicky when it comes to bank statements anyway. So in regards to expenditure, I'd probably say something that's not on this slide that's really important to bear in mind is kind of really dissecting those bank statements to make sure what you've keyed in from an expenditure point of view matches what's on the bank statements. In regards to the actual document themselves, so you want to make sure the dates are on there. We want to see the customer's name. We want to see the account details. So the sort code, the account number, we want to see their address on there. And we do want to see a running balance. So we get sent through statements sometimes where we've got the transactions on there. So we can see what's coming in, what's coming out. But we do need to see that running balance on there as well, just so we can ensure it all adds up, essentially. So that's a bit of a common factor that we sometimes have to push back on. So they're the things, first of all, when you're looking at the bank statement point of view, they're the key things that you want to look for to make sure you've got them on the statement. We also want to make sure that the transactions match up with the correct account. So we also sometimes get sent through statements where if you've got a customer who has different bank statements, they kind of get muddled up. So what I generally say with subprime lenders anyway is whatever accounts the client has, you're generally always better off sending 3 months bank statements for each account, so we can ensure that we're not coming back and asking for it if clients are transferring money left, right and centre, and it's all kind of resolved at outset. And that's the easiest thing to do, so we can handle it from there. We also want to make sure documents are dated within 30 days of application. So when you submit a case and the underwriter looks at it, again, I think specialist lenders the turnaround times aren't the quickest at the moment, but we do want to ensure that when you've submitted that application, bank statements need to be dated within the last 30 days in order for us to pass them cases through to an underwriter at case management stage. I'd probably say we get kicked back the most on that, where documents are out of date. Again, it's just making sure that we're getting as recent of history as possible. It also helps with if there's any gambling or anything like that on bank statements. If we've had a month that's clean or the bank statements are quite old, we can't see what's going on in the most recent kind of few months. So that's something what I'd look out for. So documents dated within 30 days. We always need 3 months continuous bank statements as well. So for example, at the moment, we're probably saying we need the month of April, May, June, or as much as June as possible. And then you backdate to March, essentially. So we have a full 3 months. So when you get them bank statements come in, just make sure you're looking at the dates. And we've got 3 consecutive months to ensure, again, that there's no pushback on that. Most important thing really is just making sure we've got the statements that show the salary and that show the expenditure. So this comes back to my point earlier. When you've got a client who maybe has loads of different accounts and they're all for different purposes, it's probably worth, especially when you're dealing with specialist lenders, just sending the lenders all the bank statements that they've got, the most recent 3 months, so that we can preempt and we can see what account the expenditure is coming out of, what account the salary is going into, and any kind of savings or ad hoc payments as well. We'll be able to see it all and we can assess it from there. So from a bank statement point of view, that's generally what you're looking for bank statements. When it comes to employment, again, few things that you need to bear in mind. So when it comes to client that's employed, we want to see the most recent 3 months consecutive pay slips. Again, those documents have to be dated within 30 days of submission. So generally, we always want to see pretty much the most recent month's pay slip. If there's any overtime, commission, bonus, or anything like that, generally, again, you want to make sure that it is on those most recent 3 months payments or pay slips, so we can then kind of average the last 3 pay slips out and have a look and assess affordability from there. In regards to income as well, this has to be evident. So going back to the last slide, you want to make sure that the basic income that you can see on the pay slip matches what's in the bank statement. So to give you an example, I had a case recently where a client was paid in cash. We had pay slips to back it up. However, they weren't paying those cash payments into the bank statements. So we couldn't verify that income essentially. And essentially that's something that maybe could have been referred to a BDM at outset, or it could have been picked up maybe a little bit earlier. So just make sure when you're looking at the pay slips, you can actually see the salary being credited into the bank statement as well, because that's what we're generally looking for. With your self-employed clients, we ask for, or specialist lenders ask for, SA 302s with corresponding tax year overviews or accounts. 9 times out of 10, we don't want them to be any older than 18 months. Bit conflicting, because I know that a lot of self-employed clients like to delay doing their tax returns until the very last moment. But 9 times out of 10, lenders are generally going to ask for, so for example, on the 2021 accounts, lenders are probably going to start asking for that from October. So for your self-employed clients, I'd kind of preempt that they're kind of getting those documents sorted rather than leaving them till January last year. I mentioned we need the tax year overviews with the SA 302s as well. Key thing to bear in mind with the tax year overviews, and again, a pretty common problem, is a lot of the time, if we get an SA 302 that's done from an accountant, the tax figure sometimes doesn't match on the tax year overview. So you want to look at the tax on the SA 302 that the accountant would have done, and also the tax that is on the tax year overview that they actually need to pay. If there's a discrepancy between the two, we're generally going to ask for a new one. So either a new SA 302 to match the tax year overview, or they need to resubmit their kind of tax return and see if they can get that amended, or we'll ask for an explanation for the difference as well. So just be careful when it comes to tax. That's something that you need to keep an eye out on. With your contractors, so particularly around your day rate contractors, we need to make sure there's a day rate on there. And we need to double check how many hours they're working as well in general. So for like your PAYE contractors or your fixed term contractors that maybe have set hours each week, make sure there's actually an hour on there if they're getting an hourly rate as well. With your day rate, so we want to make sure they have a day rate. We need to make sure that there's an expiry date on there as well. Reason being is we need 3 months remaining by the point of completion for a day rate contractor. So it just gives us a rough idea of when the contract's due to expire and if we need to get like a letter from the employer to confirm the new expiry date or if this contract will be extended. Moving on to some common issues in regards to packaging in general as well. So with declaration forms, first of all, I know that we're probably a little bit behind on electronic signatures at the moment. A lot of the time we get digital signatures come through. Again, specialist lenders are a little bit behind on that. So we generally need a wet signature for applicants. So it's always worth getting that first. We also need to make sure that the broker section on the declarations are filled out as well. So I'd probably say 6 out of 10 cases, we get a declaration uploaded and the broker section is left blank. So rather than us pushing back and you waiting in a queue for us to push back on that, if we can make sure that that broker information section is filled out, we should be good to go with that. Evidence of deposit as well. So we get quite a lot of cases where the deposit kind of doesn't match what it should be. So I'll go through a couple of scenarios of what we need from a documentation point of view, which kind of leads on to point 4 as well. So particularly around gifted deposit, we need a gifted deposit letter that needs to be signed by the donor. We also need supporting documents for that, as do a lot of other specialist lenders as well. So generally we'll want the ID for the gifter. And 9 times out of 10, especially if the deposit's over 10 grand, we'll want to see the bank statements for the donor as well, so that we can satisfy AML requirements for that origin of funds. Rather than offer it and the solicitor sort it out, we need to sort that out as well. So again, to kind of preempt anyone pushing back or asking for any further queries, where you do have a gifted deposit, think letter, ID, and proof of deposit for the donors as well. And that should satisfy all the requirements. Probably our most, where we decline cases the most potentially, is with expenditure. So committed expenditure box not filled in properly at DIP and FLAP, and undeclared committed expenditure as well. So over 50% of our cases at Bluestone decline because of affordability. That's over 50% of the cases that have declined, by the way, not just 50% in general. So over 50% of the decline cases are declined based on affordability. So going back to my bank statement point earlier, where I said specialist lenders are generally more nitpicky with bank statements, and we're going to dissect those a lot more. We're especially dissecting them because of the expenditure. So a real common one is, for example, someone will key in the client only pays £30 for phone, but 9 times out of 10 it's higher. That also includes kind of Sky or home phone or anything like that as well. So it's just making sure that, again, when you're kind of looking through those bank statements, what they're actually paying correlates with the DIP and what you've keyed in, because generally that's going to make all the difference. It's also worth mentioning that we get a lot of undeclared committed expenditure. So in regards to us specifically, our system can be a little bit funny potentially, where you need to key it in at application stage rather than at DIP. So there's a little plus button on committed expenditure that you need to kind of fill in all of that committed expenditure, but fill it in anyway, even if there's any credit cards, loans, HPs, anything, whether it's being repaid or not. We need to make sure that we're keying it in at application stage. Otherwise, we'll miss it. And that could have a detrimental impact on affordability as well. In regards to complex credit in general, and us as a lender as well, especially dealing with the packaging side of things, and the type of clients that we deal with specifically with adverse. So in regards to packaging, we do actually have resources on our website which can help you out with packaging. So we have packaging guides on there. We also have an underwriting checklist, which basically confirms any documents that we might ask for in regards to certain scenarios. So for example, if your client's getting any kind of benefit income, we always need to see the latest year's award letter. So that would be an example of what's on that underwriting checklist. So we have lots of resources that you can kind of refer back to make sure that when you're uploading these documents, we're kind of getting them right first time and we can get them through as smoothly as possible. We also have resources on our website of how to read credit reports. So if anyone isn't used to kind of dealing with adverse, and with adverse clients being on the rise, if they're landing on your desk and it's not something that you're used to, we do have general resources on our website as well that aren't Bluestone specific, just about how to read credit reports. So whether that's looking at the score, looking at CCJs, defaults, where to find them, what to look out for. So the registration date, the amount, whether they're settled or not. We have tips and kind of hints on what to look out for and what specialist lenders in general kind of care about in regards to that as well. And we have got some processes in place in regards to getting CPD videos out soon as well, which should help around kind of packaging and our criteria side of things too. In regards to our underwriting, and this kind of links back to the bank statement point, the payslip point, all of our underwriting is very, very manual. So it's never going to be a computer says no scenario where, you know, it just kicks it out on affordability and there's no kind of leeway on it. There's always going to be a human involved. So we'll try and do as best as we can to get any cases through, whether that's trying to be a little bit more flexible on affordability after having a look at the bank statements. There's always going to be someone to discuss those cases about. All of our case tracking is online as well. So you can kind of see what stage you're at, whether it's at underwrite or whether it's at case management. I'd probably say sometimes the beginning part of our process can be tedious. That's just in regards to packaging. So hopefully you kind of taking those tips on board and knowing what to look out for and what kind of dates to upload. That should help as well. But your BDM's on demand to help you guys with that too. Just in regards to our criteria, and especially with the adverse side of things, we actually don't credit score. So that's never going to have an impact on us declining a case. So client could have a score of 100 for all we care. It doesn't make a difference. So we're purely looking at what's in the credit report, and we're only taking into account what documents you provide us essentially. So the income, the expenditure is all based on those documents that you guys provide. And we do base all of our criteria upon completion as well. So if you've had any clients where potentially in the last 6 months they've had a default registered, what we can do, if it was registered 3 months ago, we can get the case in, we'll get it through underwrite, we'll get it to offer, and we'll just delay completion until it's then 6 months old, and we'll work with it all based at completion rather than at dip stage as well. So we can be flexible there too. In regards to keeping up to date with us, so we have a LinkedIn page. We post all kind of stuff on there in regards to case updates, BDM posts, videos, stuff like that. So if anyone wants to keep up to date with that, you can find us on there. And we do send out quite a lot of marketing emails as well once you are registered, just to keep you in the loop with our timescales and all bits of information like that as well. Does anybody have any queries in relation to the packaging side of things?
Neve, we've had a mountain of questions come in.
Perfect. Let's have a look.
So here we go. Let me direct you to one or two to start off with. So we've had Robert Leonard. Thank you first of all, thank you so much for that very, very detailed presentation. I've learned a lot today, actually, and so many thanks for that. Robert Leonard was first out of the blocks with his question. How do you judge the SEISS grant for the self-employed? How do you view that when those appear on an application?
Yep, so we're actually probably one of the more lenient lenders out there in regards to the grant. So we're not actually too concerned if your client has taken a grant. What we look for is we'll always ask for the most recent 3 months business bank statements for self-employed clients. As long as the income coming in on those most recent 3 months correlates with the most recent year's SA 302, and we can see that income coming in and we can see it stable, doesn't make a difference to us whether they've taken the grant or not. The only other thing I'd say on that is, again, we're fine with it, but as long as it's not being used towards the deposit.
Super, Robert. I hope that answers your question. We've got another one from Robert as well. And how do you judge the bounce back loan too, please?
Exactly the same. So again, if they've taken use of the bounce back loan, that's fine. As long as the income for the past 3 months is there, and as long, well, they won't be using it towards the deposit anyway, but same rules apply.
Lovely. Thanks for your questions, Robert. And now Chris Freed from Mortgage Seeker Limited asks, in general, do you require the last 3 months bank statements for savings accounts as well as the customer's own current account?
Yeah. So when if the deposit, for example, is coming from savings, we always want to see a build up of funds. So if I kind of relate this back to Bluestone specific, when we ask for the requirement, we'll literally just ask, please provide a build up of savings. You're always best off uploading 3 months. Otherwise, people will push back on it. So 3 months as a basic rule of thumb, just get 3 months uploaded for all bank statements that the clients have.
Lovely. Thanks very much. Thanks for the question, Chris. Another one from Kalpana Patel. If company director if a company director is holding 50% shareholding, then what kind of documents are required in that instance?
Yeah. So with your self-employed clients, if he's a limited company director and he's got only 50% shareholding, we'll work off salary and dividends. So we'll want to see the most recent year's SA 302 with the corresponding tax year overview, so we can see that salary and dividend income. If the director's salary and the dividend is shown on the accounts, feel free to upload the accounts as well. So either or. And then along with kind of 3 months personal bank statements, we'll ask for 3 months business bank statements as well, where, as I mentioned earlier, especially with your self-employed clients, we just want to make sure the income coming in for the past 3 months correlates with that SA 302, and we'll be fine with that.
Lovely. Thanks, Neve. I was going to say it could be a lady as well, not to be prissy, but
True.
I just thought I'd flag that one before we move on. Thanks, Neve. We've got one here from, and forgive my pronunciation here, I think it's Agnetha Augustinac. With contractors, we have clients who are being paid on the piece by piece basis rather than a daily rate. What's your stand on by piece wages? Asked Agnetha.
Yeah, that's a very good question. I'm not sure, to be fair. What I'd probably say, anything where it's a little bit out of the ordinary, we'll always have a look. So if you actually have a copy of the contract, which we generally ask for with contractors anyway, it's probably worth pinging it over to us so we can have a look, and then we can assess how much they're getting paid, when they're getting paid, and how long that contract is for, and we'll refer it and we'll see if we can do it.
Lovely. Thanks, Neve. And actually, just to say, all these questions as well, we'll be going over to Bluestone afterwards. So if there's any further discussion or any further questions that you want to add, then obviously you can get into that debate together. Kalpana as well, another question from Kalpana Patel. Will you consider net profit for directors for ability as counting towards affordability?
Mm-hmm. So with your self-employed clients, limited company directors, if the client is 100% shareholder, or we've got 100% shareholding on the application, so for example, couple and they have 50% shareholding each, we'll work off net profit and salary, in which case we'd want to see the accounts. If we don't have 100% shareholding on the application, that's when we need to work off the salary and dividends.
Excellent. Thanks very much for that. And one more as well from Kalpana. Will you consider restaurant clients? Because obviously lots of sectors have been under huge pressure during the pandemic. So where do you stand at Bluestone?
Yeah, I'll talk about COVID kind of briefly with self-employed clients as well, whilst we're on the topic. So when COVID first came about, which was a long time ago, I'm sure everyone's sick of hearing of it by now, but we were a little bit more strict on clients who worked in sort of retail, leisure, hospitality, travel, those kind of industries. We're pretty much back up and running as we were normally for the past few months. So if you've got a client who works in any of those sectors, restaurant, bars, anything like that, we're generally happy to do it. Again, it just comes down to looking at the most recent bank statements to make sure that the income coming in correlates with the most recent SA 302. As long as we can see income is consistent for the past 3 months, we're fine. What I'd also say on that as well, any of your clients where they're doing their 2021 tax returns and they're lower than 2020 purely because of COVID. So a guy who owns a restaurant is a perfect example, where they're probably have going to seen a dip in 2021. We'll solely work off 2020 accounts. Again, as long as we can see that for the most recent 3 months on their business bank statements, their income correlates with 2020's, then we'll essentially ignore 2021s because we can rationalise that blip is purely COVID related.
Niamh, comprehensively answered, thank you. And I think we've got time for one last one, and this one's from Kerry Blackmore at Cash in Green Financial. She's asking, does everyone have a specific BDM from Bluestone if they come into any case issues?
You do indeed. So we're split into regions. If you go onto our website and you go to the contact us page, you'll see all of our lovely faces on there, and you'll be able to kind of pick where you are in the region, and it should give you your BDM's details. So everyone should have a BDM. I'd say the type of applications that we get is probably worth speaking to your BDM before you submit a case, just so we can give you some more tips. Or what I generally like to do, I generally like to go through documents with my brokers anyway, to see if I can help where I can. And then, yeah, of course, any issues, any problems, get in contact with your BDM and they should be able to help or see what they can do at least.
Niamh, you've been fantastic. Thank you so much for everything today, and some fantastic answers as well. And thank you very much to all our, obviously, from everybody, to all those asking questions as well. You've been brilliant. Okay.
Thank you very much, Vicky.